This is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, everyone, and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. You know, Andrew, on DeFi Decoded, we seem to often return to this common theme that blockchain and crypto is allowing us to reimagine financial services and how markets work for the digital age. You know, Bitcoin is money that's native to the internet. It can be moved and stored and managed peer-to-peer. NFTs are digital collectibles whose provable scarcity makes them work well for, art and identity and other sort of rare items. And DeFi replaces intermediaries with code, what we call, smart contracts that allow us to handle many aspects of financial services. And there's this other area that seems to be growing in importance, in no small part, actually, thanks to you and the work that you're doing at SX, which is around blockchain-based prediction markets. So for people that don't know, prediction markets basically exist so that individuals and entities can bet on the outcome of different kinds of future events, whether it's sporting games or elections or the weather, or even to the value of stocks and other financial assets. They can be used for fun and entertainment, in the example of, say, betting on the outcome of a sports game, or for managing risk, in the event of like a farmer using a prediction market to basically bet that the weather will be bad in order to hedge against crop failure, right? So that he or she is protected. So there's all these really nascent sorts of applications, and prediction markets are a thing that Vitalik Buterin and others have been talking about for a long time, but haven't really scaled or reached their potential, I think, until now. So Andrew, over to you.
Yeah, so I'm assuming you're giving me the lead in on our the SX network, which is the project I founded along with my two co-founders. We just raised our Series A, just at a $9.5 million Series A with some of the top crypto investors in the world.
Congratulations. Very exciting. Happy to be a supporter. Full disclosure.
Yeah, exactly. We've been working on this project for over 4 years, so it's been great to sort of see the vision come to fruition. And exactly like you said, I mean, you gave a great sort of overview of prediction markets, and we've been fortunate to sort of lead the space when it comes to sort of user adoption and community. We facilitated over $170 million in sort of transactions already. And the really big thing we're excited about is we're going to be launching our own blockchain called the SX network over the next couple of weeks. And we have about 25 different dApps and protocols that are going to be coming on the network with us. And we're also the very first Polygon Edge blockchain. So you can almost think of it as
What does that mean? Just remind us, because we've talked about Polygon, I think, with Jake Hanna in the past, but it'd be helpful to give people a refresher.
Yeah, so Polygon is really a suite of scalability solutions built for Ethereum. They're sort of most known for Polygon POS, which is a sort of proof of stake based, you can almost think of it as like a side chain built on top of Ethereum. And then they have they're working on plasma based solutions, ZK solutions, and even rollups as well. And one of their sort of solutions is called Polygon Edge. And essentially what it does is it allows projects like us to launch their own blockchain using the sort of Polygon SDK. So essentially allows us to leverage their open
SDK
source.
Meaning software developer kit.
Yeah, so it allows us to leverage their tech and launch our own chain. And something that I've obviously been harping on a lot on DeFi Decoded is this sort of conviction that we're about to be moving into wave 3 of the smart contract space. So wave 1, Ethereum, it's all about security and decentralization. It's very high cost, but also highly secure. Where we are right now is sort of in wave 2, which is a highly scalable blockchain. So things like Polygon, Solana, Avalanche, that are very cheap to use and a little bit less secure, but still generic. And I think we're moving into wave 3, which is going to be almost application-specific blockchains. So the same way that countries specialize in certain industries, blockchains will specialize in certain industries. And we're starting to see that a little bit with Ronin, with play to earn gaming, Osmosis for DEXs, and then obviously what we're doing with sort of prediction markets and related DeFi applications. So we're really, really excited to be sort of leading the charge there.
So let's talk about what crypto has to do with this, because there are some examples of prediction markets. There's the Iowa electronics market, where people can, I guess, bet on the outcome of like the Iowa caucus, right? The primary there. And then you've got the Hollywood Stock Exchange, which I'm not even sure if that's around anymore, but you can trade on movies and box office returns as well. But like prediction markets as an idea make a lot of sense. Obviously, there's tons of demand just on betting for people to bet on the outcome of things. And yet in the non-crypto space, they haven't really taken off. And instead we rely on not so much like marketplaces, but intermediaries, basically like bookkeepers for wagers, right? So like, what are the problems that a crypto solution like SX.bet, which is the flagship, was the first application on the SX network. Like, what is that doing that is better than the way things were before?
Yeah, it's a great question. So prediction markets, sort of the biggest use case is initially, at least, has been sports betting. I think the biggest sort of what I call the unfair advantage of a blockchain-based prediction market or betting exchange, whatever you want to call it, is community ownership. So traditional sports books and prediction markets, or I should say really traditional sports books, have a highly exploitative relationship with their users. They're what's referred to as dealer markets. So essentially when people bet on sports, they're betting against the operator of the platform directly. And essentially what that means is that they only make money if their users lose. Which is a horrible sort of conflict of interest to have with your user base, and leads to very high costs, incredibly low transparency, and just a whole host of other problems. So what's always been really interesting to me with a blockchain-based solution is that you can actually have the community own the platform itself through the use of sort of this native tokenization. And that allows you to build these network effects over time and at the same time, you essentially have no conflict of interest with your users because the users own the platform. And then once you're sort of fully decentralized, the users actually operate the platform as well. Which to me is just really, to be honest with you, this isn't actually entirely unique to this specific use case. I think this is actually the sort of core value prop of all of DeFi, is this idea that these industries that typically don't have user interest at heart can now be owned by their users. And I think that's an incredible value prop to people. And I also think it leads to sort of more ethical and sort of better run platforms.
Interesting. So I always like to think of it as like negative sum versus zero sum versus positive sum. I mean, right now it's a zero sum game, right? So like you lose, the bookkeeper makes money. Money is going from one place to another. And what's interesting about the tokenization model is that the more people bet and the more money that they bet on the outcome of future events, the more they earn in the form of the token. And the more they bet and the more they the more often they bet and the more money that they bet, the more valuable that token becomes, right? So it's sort of like a DEX, like a decentralized exchange, in the sense that instead of being an LP, like a liquidity provider for a pair of crypto assets where you're trading between these two things, it's actually sort of like of lots of different pairs. It's the pairs on the outcome of like a Raptors game or whatever, the Super Bowl or something. And I know ultimately beyond sports into other kinds of areas. So like the more players there are, the more value that they're wagering or staking on the outcome of events, the more valuable that the whole network becomes. And if there's a certain number of tokens outstanding and you're aware of how many there are, what the growth rate, then you can kind of guess like how valuable that token can become. Right? Is that a fair kind of understanding?
Yeah, that's definitely one way to think about it. I think like it's sort of designed to reward people who contribute value to the community and the network. And the biggest sort of, at least for the prediction market side, the biggest thing that you can provide to the network is actually liquidity. Because as we know, with sort of traditional stock exchanges, liquidity begets liquidity. So as there's more and more liquidity on the platform, more and more activity, it becomes easier and easier for other people and more attractive for other people to provide liquidity to the network and also trade. So there's huge network effects that way. And what's great about it, though, is that it sort of solves the chicken and the egg problem, where if you're in a platform that doesn't have initial liquidity, you earn a larger share of tokens for being early. So it essentially allows platforms to sort of bootstrap their liquidity, and at the same time allows the users to actually own the exchange that they operate on. It's actually very similar. We're sort of going back into time in a way, but in the future, because stock exchanges in the past used to be owned by their members. And then it was about 15 years ago that they sort of got rid of the member-based model and went to just a pure for-profit model. And so what SX is doing, but also what DeFi is doing, is kind of just going back to the sort of member-owned and operated model for these incredibly important pieces of financial infrastructure.
Yeah, it's really interesting because I don't know if you've seen this HBO documentary on Carl Icahn yet, The Restless Billionaire. I would encourage anybody who's listening to this to check it out. Carl Icahn's probably one of the most famous activist investors in the world, what used to be called a corporate raider. And he talks about like what it took to be a player back in the day. And it was, you gotta get a seat on the stock exchange. And, you know, even Carl Icahn, as a sort of young, successful New York finance guy, couldn't afford it. And he had to go to get a loan from his uncle to buy a seat. And his uncle was, you know, a bigger sort of player. And, you know, that, and it's not because of that he became who he is, but it was a critical first step on that path. So it used to be back in the day that, yes, we're owned by members, but the barriers to entry are really high. And what's really interesting about like these kinds of owner operated models or community owned models is that you can start with relatively little. And just by helping to bootstrap the network, by actually like adding value to it, you can actually earn a stake. You can earn that seat in the table, which to me seems like a far fairer and more sustainable model for not just prediction markets, but for all of these other kinds of utilities. And that's why I think DeFi and crypto in general has scaled the way it has, and why people think of it as such a viral sensation, is because it is incentivizing early adoption, which I think is kind of interesting.
Yeah, no, I totally agree. And I like, this is why I don't understand sort of all the hate that the crypto space gets in a lot of ways. I think it's sort of born out of some level of ignorance, because I think like whether you're on the right or the left sort of politically, there's things that are in the crypto space for both sides to get incredibly excited about, right? Like there's huge amounts of innovation, there's huge amounts of sort of technology and sort of capital being created. But then on the same side, the whole point of crypto is to sort of distribute those gains to the community itself, which I think is something that even if you sort of don't believe in capitalism, you can sort of believe in that, at least that sort of, I think it sort of ties into this theme of also employee ownership, which is something that I think like traditional businesses are trying to get into more and more, but it's very costly. Like I know Uber, for example, was trying to give Uber drivers shares in Uber, but they simply couldn't because of the sort of the transaction costs of actually issuing very small amounts of shares to Uber drivers. That you can do that sort of, you can distribute ownership through a token very cheaply. And so I just think that's kind of the huge unlock to me. And at least philosophically, I think is a great, I think it's an angle that everyone can kind of get behind. So that's why
it's like it's a decentralized business model where it's like owner controlled, owner operated. So interesting because like in blockchain revolution and in subsequent stuff that I've written, I tried to understand like how you could apply this model to different kinds of existing businesses. And interestingly, like DAOs have had their sort of initial success in DeFi, and then sort of as like a crowdfunding tool, really. You know, if you think of like Constitution DAO, the ability for a community online to not just get behind something, but actually to raise money really quickly, right? But we also talked about this idea of, you know, the sharing economy, companies like Uber and Airbnb, and how they're not really sharing economy companies. There's not a lot of sharing going on. When Uber makes money, when the share price goes up in value, it's not shared by all the different stakeholders, including people who actually, take rides in Ubers. Like the drivers are important, but other people, like we, by using Uber, make Uber valuable. So you can imagine like a decentralized model where every time you took an Uber, you earned a token, right? And as a driver, you would certainly earn much more because you're adding even more value. And that would be a way to, obviously, if you wanted to compete with Uber today in a Web 2 model, you'd have to raise billions and billions of dollars, and you'd probably still fail because they've consolidated, monopolies in a lot of cities. But if you had a Web 3 model where all of a sudden anybody could earn a share of the entity just by taking a ride, which you were going to do anyway, then it might actually be a way to grow virally. And I noticed that you've actually written a report for the Blockchain Research Institute, and you've referenced Chris Dixon at Andreessen Horowitz, and he's done, I think, probably the best work in thinking about like the difference between like network effects for Web 2 and network effects for Web 3, right? And the differences there. I know we're moving a little bit bigger picture here, but I'm wondering if you have any thoughts on that and how it applies to this area.
Yeah, no, totally. One book that actually really influenced me, and I wrote an article about this, I think 5 years ago, was this book called Platform Revolution. And it has this one graph that is really interesting. It sort of segments businesses into 4 groups. There's asset builders. So that's people that directly use assets to generate returns. Service providers, which provide service in order to generate revenue. Technology creators, so that's like a typical SaaS platform, and then network orchestrators, which actually just provide a market for other people to transact and then take a fee. And they sort of just charted the different price to revenue ratios for the different groups. And essentially, asset builders and service providers had very low multiples, sort of 2 and 2.6. So they trade at 2 to 2.6 times revenue. Technology creators were even higher at 4.8. And then finally, network orchestrators trade at 8.2. And the reason why, and they essentially said that this is a very rational response from the market because these businesses are incredibly capital light and have huge network effects. And so it allows them to be, they're highly defensible and also gives them huge pricing power. And that's very interesting to me, but I think there's actually a 5th category, which is decentralized network orchestrators. And I think those deserve an even higher multiple because the problem with network orchestrators is, from what we've seen, is that they essentially become too powerful, and eventually they essentially abuse their position too much, and there tends to be a very negative sort of perception of the platforms from the users. We've seen that in spades with Uber, obviously, and to a lesser extent with Airbnb. And the reason why I'm so excited about this 5th category is that user-owned networks are the solution to that. If the users own the platform, there's no one really to be upset at. The users are the ones that control the platform. I think, like, for example, not to get overly off topic, but I think like one of the coolest things that Elon could do now that he's bought Twitter is actually make it user-owned. So essentially create 1 billion Twitter tokens or whatever you want to call it, and give all 200 million users some Twitter tokens. And I think the valuation of Twitter would be far higher than the $44 billion that it was just bought at. It would be, in my opinion, worth $100 billion. Just going from that essentially centralized network orchestrator to a decentralized one, while also lowering his sort of risk because he's not the one in charge of Twitter, the community is.
Right. Okay. I'll believe it when I see it. It's interesting, not to again, I don't want to get off topic, but on that, in the world of DeFi and crypto, you get these things called airdrops, right? And airdrops are based on a lot of things: how much of a token you own, whether you stake, whether you participate in governance, and so forth. It'd be pretty easy to do, so long as it was kept under wraps, an airdrop with a snapshot for Twitter holders, where it's or Twitter users, where it's okay, it's some combination of people who tweet a lot, but also get lots of engagement, but also have lots of followers, but also, whatever, just a bunch of different factors. And then that would be how much they own. So the people who actually add the most value, Ironically, Elon Musk is the single person that probably makes Twitter so valuable, more than like any other person would probably receive the most in this airdrop. So enough about Elon. Let's get back to prediction markets. SX network is its own blockchain, and you said that it's got 20 applications that are launching. So what kind of applications are we talking about? Are they related to this space, or are they something else? Help people understand that, and also, the idea of creating a blockchain that is application or maybe vertical specific, focusing on this area. Like, what's the logic there, and talk about the applications.
Yeah, totally. So it's around 25 applications at the moment. Our goal is to sort of scale to over 100 by the end of the year, which I think is definitely achievable. It's definitely initially was sort of focused around the prediction market angle, but we actually increasingly got a lot of interest from traditional DeFi applications and even some NFT applications actually as well. So we're going to be releasing sort of the full suite of applications that are launching. But one thing that I'm sort of a big believer in is you want to sort of grow the economy. Like I see smart contract chains as like their own sort of digital sovereign economy. And so anything that increases sort of the velocity of commerce and transactions within this network is beneficial to the growth of the network. So we definitely have obviously had a focus on prediction markets, but we've had a lot of interest from DeFi projects and some NFT projects, particularly within the Polygon ecosystem. The Polygon team has actually been incredible to work with. They provided a grant. We've been working with them on building out this chain. And we're really excited about sort of, I'm personally incredibly bullish on sort of everything that's happening in the Polygon ecosystem.
I remember when you told me about Polygon, maybe January of last year, and you'd said, because we were talking about scaling SX at the time, and Ethereum was becoming a victim of its own success. As we've talked about, the gas fees are prohibitively high for sort of the size of transactions in a lot of these applications, and all of a sudden there's this layer 2 solution that's like rapidly scaling these networks and allows something like SX to thrive. It's really interesting. Polygon itself is founded by Sandy Nailwall, who's an Indian entrepreneur, and a lot of his team is based in India. I'm wondering if we can maybe just change topics a little bit here, because Andreessen Horowitz just announced a $500 million fund just for India blockchain opportunities. I think we've talked a little bit about India before in the past. It's interesting, they actually have the largest number of crypto users in the world, just because they have such a huge population, but also, it's young, it's digitally native, it's tech savvy, they're used to using smartphones and so forth. So you got 100 million crypto users in this country, which is actually incidentally more people using crypto than people who have landlines. And probably soon will be more people who use crypto than have bank accounts. So it's kind of interesting, like the market is there for this crypto, for crypto to take hold. I think the government's been kind of lukewarm on the subject. They were threatening this ban, and then they just said, no, we're going to tax it because maybe there's a revenue opportunity there. But anyway, you've been really close to Sandeep and his team, and I think have a good lens on this. Like, what's your perspective?
Yeah, I'm incredibly bullish on India. I think someone who's been sort of opened, I think, a lot of people's eyes to it has been the former CTO of Coinbase, Balaji, who has been sort of ringing the bell on this for a while. And Polygon itself just raised a $450 million round led by Sequoia. So they're obviously leading the charge. And there's actually a couple other DeFi apps, projects like InstaDApp, which I believe has over $2 billion of TVL. It was based by a very young sort of entrepreneur in India as well. And there's a bunch of other DeFi protocols that have done really well. India seems to be, like you said, it's highly, there's a couple of advantages, I think. One is obviously just sheer size. It's a relatively sophisticated from a technical perspective. There's tons of developers in India.
That's the point that's almost like more important. It's like, it doesn't just need to be that there's a big market there. It's that's actually where a lot of the talent is.
Yeah, exactly. And obviously speak English. And so it's, to me, I'm incredibly excited about India. I think at least from what I've seen in the sort of the web world, the nice thing about crypto is that it's very global. So the first two sort of web revolutions, Web 1 and Web 2, were very much concentrated in Silicon Valley, whereas the Web 3 sort of movement is increasingly happening everywhere.
Yeah.
And COVID actually accelerated that because it sort of got rid of the stigma of having to close deals in person, which definitely favored sort of Silicon Valley based projects, and allows people to close deals virtually, which essentially has opened the floodgates for everyone. And then at the same time, you combine it with this sort of global capital markets that is the crypto ecosystem that is also 24/7 and not necessarily sort of working on one specific time zone. So I think those factors have really allowed the sort of crypto ecosystem in India to be one of the fastest growing ones. And then obviously sort of Sandeep has led the charge with Polygon.
Well, not only that, I mean, one of the big benefits of Silicon Valley in the past has been sort of the wealth effect, where people make money and then reinvest into other startups. You know, it's almost like a flywheel, where the more startups there are, the more successes there are, the more they get funded, right? And today that's less relevant because geography matters less. But even still, in India, you know, if you have a bunch of Sandeep Nailwalls who make hundreds of millions of dollars building these really useful protocols, they're going to reinvest it. I mean, Sandeep led the charge for big fundraising for charity in India, and so it wouldn't surprise me if he did something similar, you know, for Indian entrepreneurs. So that's something else I'd be keeping an eye on too.
Yeah, definitely. Yeah, I think they raised over $2 billion for COVID relief in India, which is
unreal.
Just a completely insane amount.
I know.
So, yeah.
All right. Well, I think that's it for today, Andrew. It's a great discussion on SX. So, if people want to learn, we've been very disciplined in not talking about, you know, SX too much. Just like we don't talk that much about, you know, the 9-point Bitcoin ETF, much to the chagrin of my business partners. But where can people learn more about SX? You know, use the blockchain, get involved. Like, talk about that a little bit.
Yeah, totally. So our official website is SX.technology. So www.sx.technology. We obviously have SX_network for a Twitter handle, which is really where a lot of our sort of discussion around everything happens. We also have a Discord channel, which you can find just from our website or from our Twitter as well, which is where really the community sort of congregates. We have sort of SX Weekly, which is like a essentially weekly newsletter that comes out highlighting all the different things happening in the ecosystem. Things are really going to ramp up over the next couple of months now that the chain is finally live. And really, really excited to sort of have all this stuff come out over the next couple of weeks.
Right on. Future's so bright, you got to wear shades. Andrew, great discussion as always. We'll be back next week for another episode of DeFi Decoded. Until then, take care, everyone. Check out SX Blockchain. Have a great one. See ya.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.